FAANG stands for Facebook, Amazon, Apple, Netflix and Google. But there are differences between my choices and Mark Cuban stocks. My biggest positions are the other FAANG stocks. How are you doing, guys? It's Damien here. If you invest in stock markets, you had to encounter an acronym FAANG. FAANG stands for Facebook, Amazon, Apple, Netflix and Google. The term was popularized by Jim Cramer from CNBC's Mad Money. FAANG groups together high-performance technology companies listed on Nasdaq. These are the biggest and most important tech stocks in the world. FAANG stock prices have been outperforming indices during the last 10 years. Let's look at why these companies are so important. First, there is Facebook, which is the world's leading social media company, which provides the Facebook platform, Instagram and WhatsApp. There were 2.45 billion Facebook monthly active users as of third quarter 2019, or roughly 1 of every 3 humans on Earth. Then Apple, the company behind Mac computers and iPhones. More than half the people in America have an iPhone. Amazon is the leader of e-commerce and cloud computing markets. There are more than 100 million Amazon Prime memberships in the United States. Amazon accounts for around 50% of the e-commerce market in the United States. Netflix is the first and most successful video streamer in the world. Almost 1/5 of all internet bandwidth in America is consumed by people watching Netflix. G stands for Google. Alphabet is a parent company of Google, and it is the search giant and the most advanced AI company. Google has 8 products with more than 1 billion active users: Search, Maps, YouTube, Chrome, Android, Google Play Store, Google Drive and Gmail. Now you know the role of these companies in our everyday life. Let's see how have FAANG stocks performed during the last 10 years. Smash that like button for the YouTube algorithm. It will help reach more people and will encourage me to give you more useful content. Facebook was not yet a public company 10 years ago, but since its IPO in 2012, the company returned plus 445.83% to its shareholders. Alphabet went up 334.46%. Apple surged 1018.07%. Amazon skyrocketed as much as 1300.28%, and the best return among these 5 companies was the result of investing in Netflix's shares, plus 4165.71%. Thanks to such quick growth, the total market capitalization of all 5 stocks is near $3.9 trillion. That's more than the overall economy of all but 4 countries: the United States, China, Japan and Germany. Of course, we should not look at past performance to predict future growth. Mark Cuban is one of the wealthiest people in America, with an estimated net worth of $4.1 billion according to Forbes. His wealth classifies him among the 500 wealthiest people in America. Mark Cuban made his fortune over a lifetime of business deals. He is also known as the owner of the NBA's Dallas Mavericks. His expertise is in television and online media, which partially explains his most significant stock market positions. Mark Cuban said on the 14th of May 2019 that his biggest positions are Amazon and Netflix. Both companies are playing a major role in the future of entertainment, streaming, and how people experience television and movies. On the 1st of October 2019, he revealed that he has nearly $1 billion in Amazon stock alone. Since the time of the May interview, when he had revealed his most significant positions, Amazon went up 2% and Netflix shares lost 6%. It is not a mystery that my biggest positions are the other FAANG stocks: Facebook, Alphabet, and Apple. I have been mentioning this fact many times in videos on this channel. During the same time, my FAANG stocks achieved much better returns. Facebook shares price increased by 15%, Alphabet went up 21%, and Apple shares returned 60%. These three companies account at this moment for around 45% of my wealth. Such a significant exposure is the effect of the performance of these companies and their share price in 2019. All the companies grouped within FAANG are fast-growing companies, but there are differences between my choices and Mark Cuban stocks. Facebook, Alphabet, and Apple are all highly profitable companies with excellent balance sheets and high profit margins. Amazon and Netflix are focused on growth only. Both companies share razor-thin profit margins. These characteristics mean that these two companies are closer to the startup phase of development, even though these are already large-cap companies with dominant positions in their area of business. The last year brought focus on profitability among stock market investors. It caused underperformance of both Netflix and Amazon versus the overall stock market. The victim of that change of the area of focus around investors were also rather unsuccessful IPOs of Uber and Lyft, not to mention WeWork IPO failure. In this video, I will focus on my thoughts about FAANG stocks. I will also talk about the reasons I am not so eager into investing in Netflix or Amazon shares. I will share my thoughts on Amazon cloud computing, which is the most profitable business for Amazon. I will also talk about the illusory advantage of Amazon in smart speakers, and about the competitors coming to video streaming which might challenge the position of Netflix. So first, quickly about my positions. We'll start with the world's largest social media company. Facebook has an extensive moat. It comes primarily in the form of network effects. No company is a better example of network effects than Facebook. Each additional user of Facebook or its other properties, Instagram, WhatsApp, or Messenger, makes the service more valuable. Would you join the social network with no users in it? Then Apple. Some people think that after Steve Jobs' passing, the company does not innovate anymore. I do not agree with it. Just look at the success of Apple Watch or AirPods. The Apple Watch dominates the smartwatch market. Similarly, go to any gym and check what percentage of people exercise with AirPods. It changed the game. You are not required to have cables tangling around while doing push-ups. I think in 10 years from now, most people will have some kind of sport or health tracker. Apple is the company which is the best positioned to benefit from it. Currently, there are around 100 million Apple Watch devices sold. Additionally, Apple is now transitioning to making more money from services and additional devices. It will reduce its reliance on the iPhone. That transition makes the company expand its P/E ratio multiples. I bought my first Apple shares after buying my first Apple device, a MacBook computer. Since then, I made much money on shares of that company, as well as I purchased iPhone, iPad, AirPods, and Apple Watch. Being in the Apple ecosystem simplified my life. If I need some device, I just look at the Apple website and I know I will not be disappointed with the device. Finally, we have the owner of the world's two most popular websites, Alphabet. Google.com is the #1 destination in the world. The second most popular is YouTube.com, which is also owned by Alphabet. The average internet user spends 17 minutes every day on these two sites combined. That might not sound like much, but over an entire year, that's 103 hours on these sites, multiplied times billions of internet users. Alphabet is also working on other bets projects. For example, Waymo, Alphabet's self-driving vehicle initiative, could be the first big hit. Owning Alphabet shares give you exposure to both the wide margin data and advertising business, while also getting the upside from these special projects. Mark Cuban explained in the interview for Innovation and Tech Today the most common mistakes he sees in investing. He said that many investors overvalue current financials and undervalue where the company can go. He said that he tries to see the future. I look at the future too, and I see the future of all FAANG companies in bright colors. However, choosing companies with higher margins give me a margin of safety. More competition arriving in the business area of Amazon and Netflix means that it is more challenging to generate a net profit. Amazon's key business areas are e-commerce and Amazon Web Services cloud storage. The company is the leader of cloud computing currently thanks to its early start. Microsoft with Azure and Alphabet with Google Cloud Platform, however, have been gaining more and more market share recently. Alphabet proved several times in the past that the company can dominate the market, even if they were not the first in the industry. The focus on the product and the user experience was what finally attracted the final user. That is why Google is dominating power in the search engine or operating system for smartphones. Google Cloud Platform specializes in high compute offerings like big data, analytics, and machine learning. Google is a leader in artificial intelligence development thanks to TensorFlow and open source software library for building machine learning applications. Google Cloud has robust offerings in APIs for natural language, speech translation, and more. Compared to Google, the AI offering of Amazon Web Services is limited. Google Cloud Platform doesn't have as many global data centers as Amazon Web Services or Azure, although it is quickly expanding. According to many charts and countless analyses, Amazon is dominating in sales of smart speakers. Information from this website tells about more than 100 million Alexa devices being sold. These statistics, however, do not show the whole picture. In terms of voice control devices, Alphabet with Android operating system is the leader with its Google Assistant. The second is Apple with more than 1 billion active devices with support of Siri. Every iPhone, iPad or MacBook or even Apple Watch have functionalities of smart speakers. Additionally, Apple is the leader of wearables with voice control systems, Apple Watches and AirPods. The truth is that Amazon didn't achieve success with its Fire phone. Gadgets like its Fire tablet and the Alexa-powered Echo devices make ordering products on Amazon easier, and that is the way for Amazon to try to have more control on the platform for online shopping. But I do not see Amazon as a leader of voice control devices. Now a few thoughts about video streaming. The new competitors will make life more difficult for Netflix. Amazon and Netflix have their streaming video platforms. For Netflix, it is their main product. For Amazon, it is only one of the benefits included in Amazon Prime subscription. The bad news for both companies is emerging competition in the on-demand video. Disney with Disney Plus, Apple TV Plus, Hulu, and of course YouTube, which for many people is the only video streaming service. Of course, the streaming video pie is getting bigger, but Netflix and Amazon will no longer be the only players in town. With the rising competition, it will be more challenging to gain the market internationally. I do not suppose that it is a problem for Americans to pay for a few subscriptions. In Europe or other parts of the world, I do think people will hesitate from having a few subscriptions. For example, in one of the biggest cities in Poland, Łódź, average salaries after tax are more than 3 times lower than in the average city in the United States. Netflix's basic plan payment is only 0.38% of the US average salary and 1.1% of the average wage for this Polish city. It looks like together with Mark Cuban we cover all of FAANG stocks. There are risks in owning these high-growth stocks. They're all technology companies, but you can also look at them in more detail. Alphabet and Facebook are advertising companies. Apple is closer to a high-end fashion company, and Netflix is an entertainment company. Amazon is a little bit of everything: retailer, marketplace, shipping specialist, and growing advertising power. Also, Amazon, Alphabet, Facebook, and Apple ended in the crosshair of politicians and regulators. Every investor has different objectives when composing investing portfolio. Mark Cuban is focused on their growth, and that is provided through investing in Amazon and Netflix. But be aware that we do not know what his exposure to these companies is now. Maybe he changed his exposure in the meantime. When analyzing growth stocks, it is about if the company is going to grow faster than expected or slower than expected. I have a different approach slightly. I also like high growth companies. Just look at my most significant positions from the United States and Polish stock markets. The difference is that I prefer to invest in companies with a margin of safety. I get it from investments in companies with lower valuation, so if my estimate of the value of the company is wrong, the downside is limited. Also, my biggest positions are companies that sleep on big cash positions. My investments are, of course, not so big yet as Mark Cuban's portfolio, but do not worry guys, I am getting there. I have both Amazon and Netflix on my radar, but I did not decide to buy them yet. Apple is less attractive now than it was a year ago after almost 100% gains in the last 12 months. I would love to buy Amazon shares, but the current valuation does not convince me yet. I still think Amazon will provide great profits for shareholders in the long term, but I believe that my choices will deliver even better returns. Let me know in the comment which FAANG stocks do you own and which would you like to add to the portfolio if there is a correction on the stock markets. If you enjoyed this video, make sure to subscribe to receive a notification about a new video being published on this YouTube channel, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!